When I was first exposed to this word called order flow about 14 years back, for me, the picture which was presented was that there are certain numbers kept on a chart, and those certain numbers mean order flow. Okay, that is what was presented to me. This is about 14 or 15 years back. But today, order flow is gone much beyond seeing numbers on a screen. And in a sense, a lot of people, when they use that word order flow, they are so zeroed in on what is happening in a particular bar. Okay, so they are focused on that 5-minute bar or that 3-minute bar or whatever bar, they are looking at that 30-minute bar, and they're just focused on that information which is there in the bar, neglecting the reason that bar is being created or what was in the immediate past to make that bar appear in the way it is. See, that bar which is developing, the volumes which are coming in front of you on that particular bar in which you're zeroing in at the moment, is because of a few things which happened in the not too distant past. In the immediate few bars, certain things have happened, and that is creating the impact or the volume in the bar which you're looking at the most right hand corner of your screen. Okay, so a lot of people neglect that utility which is there in those 4 or 5 bars away from that current bar, to the left of the current bar. Now, I believe, and it is my belief system, that you need to look at order flow much beyond that current bar and have an understanding about what is the context or the driving force which is making that current bar do what it is doing right now. Right? So our conversation on order flow is not just about talking about one particular thing happening in a current bar. Okay, it is leading up to that development out over there which is happening. Okay. Data is what is driving everything in the markets today. And I have been a trader who's always believed that we have to exploit the power in data. And if you keep ignoring data, if you keep ignoring information, and if you are relying on old, outdated information, then you're putting yourself up for a life of struggle in the markets. The markets tend to keep changing all the times. The cricket which was played by the likes of Kapil Dev and Ravi Shastri and Sunil Gavaskar back in the 80s is very, very different from the cricket which is played today. The game has changed. Now, why am I saying that? Because a lot of traders when they come to the markets, they are focused on a lot of trading strategies which were once very useful, but back in about 90s and 2000s and 2010. In the last decade, the kind of change which has happened in the market has been astronomical, big, huge impact. It has propelled NSE to be the #1 derivatives exchange in the world in terms of contracts traded. And it's not just retail traders, it's a lot of institutions from overseas who have come in and who are trading in these markets today, right? So you can ignore all that is happening around you, or you can make life better for yourself. And the way you can make life better for yourself is to arm yourself with information, and not just arm yourself with information, learn how to strategize with that information, learn how to monetize with that information.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So today's session is on the fantastic feature which we have in Vtrender charts. And let me show how do we go to that feature. This is the NTM Volume X. This has been added some time back and it's a very useful feature. We have taken a session before also about it, but today again we'll have a detailed session of how we can use this. So for today we'll just have the Nifty Volume X, and we'll see how what are the elements there in this chart and how do we make use of it. So you can see I have taken this Volume X chart right from the open today. So what does this Volume X have? The chart has three simple elements. One is the spot Nifty value. Then we have this purple line, which is the put Volume X, and the blue line, which is the call Volume X. So these are the only three elements, but the information they give you is huge. And not just information, but information and cues where you can take trades out of. So what is the purple line? Purple line, which is there today right on the top, is the option supply dominance. If it is on the upside, it is telling you what the put volumes are doing for the day. If the put volume X is above the call volume X, it tells you the supply is dominating. That means the calls are being written, the puts are being bought, or the puts are being unwounded. Same thing, if the blue line is above, it is showing you option demand dominance. So that means the puts are being sold, or calls are being bought, or the calls whichever written are being unwound. So it is giving us the volumes of the option. It is not the open interest. Open interest, we have a separate chart in Spectrum where we have the open interest of the calls and the puts. So don't confuse this Volume X with the open interest. It is showing us the entire volumes of puts versus calls. So if the put volumes are higher, that means the market is, the bias is to the downside. And if the blue is higher, that means the market is biased on the upside. Plus, what is the other thing which you need to look out for? So we do know in market profile we look for a balance and an imbalance, and vice versa. So we want to trade, we want to get into a good setup when you have an imbalance which is moving on. So how do you identify that on these Volume X chart? So you can see the fact the purple is above the blue means that we are bearish. But it is not just the lines being above the other. It is how much of divergence is there in the line. So the more they diverge, the better the strength of the imbalance. So how do we get that? That is the distance between these two lines. If the distance keeps on increasing, that means the imbalance is getting stronger and stronger. So that is how you get to know whether the trend which is happening in the market is a big one or a small one. So you can see how today, I'll take today's example, and before today's example, I'll just quickly move this to yesterday's chart, and you can see how yesterday from this afternoon 11:24 the call volume X got above the put volume X and they started to diverge, and that is the reason yesterday we got a trend day up. So you can very well see where this is happening. So when this the call gets above put or the put gets above call, that is when the lines are converging or they are crossing over, that is showing us that the sentiment is changing. So that is, if the gap is very narrow between them, that means the market is in a balance. There is not much happening. Market is undecided. If the gap is wide and getting wider, the imbalance is good and going to continue. If there is a crossover, that means the sentiment is shifting. The sentiment is changing. But it is not just the cross. After the cross, it needs to start diverging, which is what we could see yesterday with this call volume X. So I'll come back to today's. And today, right from the open, which was an open rejection reverse, we could see that the put volume X was higher. So what does the purple line tell us? Purple, as I mentioned, is the supply dominant line. So it tells us either aggressive call writing is being done by institutions or heavy put buying is done by retail or are being hedged. So also what put writing is happened if they are forced to cover, which happened today. We'll come to an example in the put chart. So this will also add up to this. So these swipes which you see, a sudden rise, I'll just mark them, and we'll make a note of these swipes so that we can correlate them with this, with the put chart again. So you can see this is coming at 11:15, the first swipe. So 11:15 is where the put volume X showed us a divergence. Although the put line was above the call line from open, this point was where it started to diverge, 11:15. So we'll make a note of this 11:15 mark, and we will check one of the put order flow chart of how you can use this volume X with actually actionable trade. So this was one which happened, and then again you see you have another swipe here at around 11:45. So when there is an imbalance which is started, especially in options, you will get a move which is continuous, and then you will hit the targets, and then there'll be a calm. So you can see how you had this imbalance, you had another swipe over here, and this entire imbalance was one move which went on till 145, and then we saw a dip coming in, and then after 215, the K period, we saw another swipe in the puts. So we'll make note of this, and you can see, sorry. This 245 bar, this is where again we saw a swipe which started. So 11:15, 11:45 and 2:45 are the three times where we can easily see where the put volume has swiped. So at the same time frame, we will open up the 3-minute order flow chart of a put and have a look at what it did. And you can do this on a daily basis. Yesterday, once the call was open, a call got above the put volume X and started to diverge. It was for us to look at the call order flow charts and look for long side trades. So as I mentioned, the purple line tells us bearish positioning. If the purple line is above the blue line, it is giving us a bearish cue. And if the gap is wider the gap, the bigger the imbalance. So the number the number which is there in the info bar at the top does not matter. It is the divergence which is happening. You can see we have this number marked up. If it is diverging, definitely the put volume X would be a bigger number, the call would be lower, but it is not the number which matters, but the gap between the lines which you need to watch out for. So if you're looking for a trending move, then we need to see this divergence happening and it continuing to move in that direction. And yes, we will keep getting dips after the dip. Again, if you get a fresh divergence in the put volume X, that is the time where you need to again looking for a fresh short trade in the futures or a long trade in the put volumes, puts. So we have discussed when blue is above purple. So I'll come back to yesterday's example and we'll see what happens when the blue, we have discussed when the purple is above the blue. We will come to yesterday's example and see what is the scenario when the blue is above purple, which was yesterday. So when the blue line is above the purple line, it is telling us it is dominated by demand. There is strong call buying activity which is happening, and put selling or the puts, the calls are being covered. And it is bullish institutional positioning because this volume X is giving us the volumes of the entire option inventory. So it includes everyone, all the big players. So when this is showing us a move, and this is tick by tick, open interest is a delayed one which is given by the exchange, but this volume X chart is live from NSE. So this is telling us what the institutions are doing, what the big players are doing at every moment. And immediately when we see a change happening or a fresh signal coming in here, we can take action on it. So the gap between the lines matter more than the absolute levels. The wide gap is telling a strong directional conviction. So you can see yesterday when we had this, you can see how these lines are parallel to each other and overlapping, and they have crossing. The blue crossed here, and then again the put tried to cross, but the blue again crossed back. So this is telling us that the market is undecided, and you can see that in the spot where we are in a range. So that also holds you from getting into a directional move, because it is very clearly showing us that the lines are converging. They are very close to each other. So there is not much of directional move which you can look for. But once you get this divergence starting, which happened in the call, that is telling you that the market is trying to put in an imbalance, and that you can take advantage of. Crossing lines, which we have seen here, the put line crossed, but again the call immediately crossed back. So that is telling us that there was an attempt for change of sentiment, but it failed, and again the calls are getting above the puts. So same thing here, the blue line crossed over the put line yesterday. It was showing us a shift in the sentiment from sideways to slightly bullish, but then again there was a dip. It was telling us no, the markets are still it's a cross between the buyer and the seller. But again, when the calls got above the put, it was telling us it is time for being biased on the upside. And finally, when it started to diverge and the lines, the distance between the lines began to get wider and wider, this was telling us that now there is an imbalance which is going on in the market, and that is the reason we had the trend day up. So, and if we now see the same with today's chart, Volume X chart, it gives us a completely opposite scenario of what happened yesterday. So this is a very useful tool, especially considering the markets are getting faster and faster, and we are not getting a trend which continues even for a couple of days. You can take an example of this week itself. We had a lower open on Monday, but we went on to probe higher. That was a buyer dominated day. We had a buy side tail which was there. But then again, the next day we opened higher on Tuesday. We left the initiated selling tail and we came back to test the previous value. So we formed an overlapping 2-day balance on Tuesday, Monday, Tuesday. Yesterday again, we made an attempt to test previous day. We opened higher. We opened above the close of Tuesday. Then again, we started to probe higher and we formed a trend day to the upside. And today again, it was exactly opposite. We made a look up above the previous highs, got rejected, and then you can see this was confirmed in this Volume X chart. So this is how you need to watch out. The signals are very clear, very clean. It is not very difficult to understand. We only have 3 elements in this. So I'll just repeat it again. If the purple is expanding, it is time to be prepared for weakness. If the blue is expanding, then it on the upside, with the blue being on the upside, you need to be looking for strength in the market. If the lines are narrow and converging, then it is volatility compression which is happening, and you need to wait for a move away in one of the lines for a imbalance to start. So this is how we need to look at this. I'll just quickly open up a order flow chart of the put. So let us go with the 25,300 put, and we have made note of 3 time frames starting with the 11:15 bar. So what I want to do is I want to show you how the same information which we get from a Volume X chart can be traded using the. So I have the candlestick chart with the M flow indicator, and you can see how this 25,300 which was having slight bit of right in, you can see the green order flow, and then the writers which were trying to get into this were forced to cover, and the 11:15 bar, which we saw the first divergence happening in the put volume X chart, you can see we have got this IB plus IB signal. I'll open up the order flow chart also. I just want to show how what you see in the volume X you can check out as a tradable setup in the particular option. So I'll come back to take all the questions, guys. I'll just finish up with this example and then we will open the floor for questions. So this is how you need to figure out. Once you get this IB signal, you are into a trade. You the IB gets activated above the highs. The low of the IB bar would be the stop loss, and you will then manage the trade. You will part book the trade and trail to your cost. And then again, you can see at the 245 signal, we again get an IB plus IB. So this was again a re-entry. So the time which we saw the 11:15 bar, you can confirm that you're getting IB plus IB here. And then again the 245 bar is showing you another IB plus IB. And we saw another divergence at 11:45, and that is giving you another IB. So IB signals are confirming initiative buyers. And if your volume X is giving you a divergence, and then at the same time you're getting a IB signal in the put, there is no better signal you can take. And these are all very manageable trades because you have a clear stop loss and targets. So if I just switch this off to the order flow chart and go to that 11:15 bar where we saw and we can do this by selecting on the box. You can go to any time frame you want. So it has gone to the start of the day, but that's okay. So you can see how here we have got some IS signal, which was a very minute one. So this is, we are above VWAP in this put. So all good. This is looking good for upside. But the first IB signal we get at this 11:15 bar. So how does this IB get triggered? Above 159, we look to go long. What is your stop loss? The low of the IB, which is 146. So this is how you need to look for trades. This, in fact, is giving you a signal. And when you are getting a double confirmation from the volume X, you know that this is going to be a very good trade. In fact, you could have even taken a long position or trailed your stop loss to this 158. So you can see this 162, the POC of the second IB bar never got hit for the rest of the day. And you went on to first make a high of 204. We climbed higher. We got another IB signal. This IB signal did get negated, but the actionable trade was, so this 287 is where it made a high. The first imbalance which started at 11:15. You can see the first signal came at 159. From 159, we came to 287. And this IS signal is the first IS signal we got. After that, IB plus IB and another third IB which we saw. So this is telling us to come out of all long puts. So this is how you need to make sure, because there is no point in giving back to the market once you have got a good move. When you have made use of a good signal, when you have got IB plus IB plus IB, and you have got a put which has given you almost 130 points, there is no point in holding on to that in expectation of more, because markets will keep giving you signals. You only need to make sure that you are in sync and you are ready to take the next one. So you can see how that third IB which we got was after that 11:45 divergence we saw. That was the fresh divergence we saw in the put, and you got this fresh IB. So this itself was one actionable trade. Long about 216, stop loss 198. You book profits at target 1, target 2, and then you will trail to this 215 for any lots you are holding if you have entered this signal. But based on the first signal, your first entry was 158. You can even trail it to 162. This never got hit into the close also. This, yes, definitely the market gave a retracement. So this got hit. But then again, what you need to do is, and once you get this IS signal, there is no point in holding on to trades which you have taken in the end of the imbalance. So you can see how we get this IS, but this IB did not get activated because we never went above this, and we never saw any divergence in the volume X chart also. So this is that 245 bar 1 which we saw in the volume X. Here again you're getting IB plus IB. So this again is a good setup where you can again get into this put long, and you've got a fresh reference here. So when you enter this, 200 is your initial stop loss. Then once you book out, you can trail it to 216 and hold on to it. So even though, yes, you have got this IS bar, so that will tell you to book profits, because once you get an IS, that is the sign that whatever imbalance was there, that is closing. So that is how you make use of this volume X chart. It's a wonderful feature, and with the order flow in hand, it gives you some very good trades. So we saw some very good, fantastic trades in the call side yesterday, and we saw the same in the put side today. And you can see today the purple line was above the call line all day, and whenever it began to diverge, a fresh divergence was coming in. It was coinciding with an IB signal in the put. So yeah, coming back to the questions, it is not total, it is the near the money. It is there in the title also, NTM. And why we choose near the money? Because maximum volumes in option comes near the money, in near the strike. So that is the reason we are using this, because out of money strikes will have very minimal volumes, which will not be of any help. So that is the reason we want to consider. If you're looking at writing, call writing or unwinding, that will only happen at the near the strikes, near the money strikes. Out of money strikes will be comfortable. They would not rush to cover. So there will be no change in the volume if you're looking at the entire options. So that is the reason we look at this NTM, near the money volume extract. So yes, based on the range of the market and the ATR of the day, we will have either 3 strikes or 5 strikes. So if there are any other questions, guys, you can please shoot them. Today's session was only about discussing this feature and showing live example of how we could use what was seen on the volume X chart with actionable trades in the put longs. Yesterday it was about calls. If you open up a call order flow chart and look at where we got the divergence yesterday in the blue lines, you will get IB signals in the calls, which you could have made use of. Yes, you can. We have a dual window feature. You have this on the right side. So I have the volume X on my left, and you can open up any chart on your right. So I showed you how I looked at the order flow of the put and the call. You can do that side by side. So here you can see this 11:15 divergence. In the volume X, and the same thing you can see with an IB signal, and flow is showing you reds. So this is telling us that the writers in this put are forced to cover. So you can use these features, guys. The tools are there, the setups are there. We have, and they are very easy to understand and very useful, and they are the most advanced tools you will ever get. And if you can make the right use of them, you will definitely be able to get some good trades, even in markets which is not doing anything, because these are markets which will suddenly wake up, give a move, and then again get back into sleep mode. So we need to be ready. We need to take trades when they are there, and then we also then need to come back and take a pause if the market is not doing anything. So the volume X chart would show you what is happening. So the gap between the lines is all that we need to follow to know whether it's a directional market or a non-conviction one. So any other queries? Yes, straddle also you can do the same. We have the option table. We have covered that in other webinars. You can open up the line chart of a straddle and see how we can make use of the M flow in that also. So that is it for today, guys. Hope this session was useful and you are able to implement what we have shown today in taking some good trades going forward. So signing off for now. In case any queries are there, you can just GM me on X. Uttam Goyal is my ID. I'll be happy to answer them. So thank you guys for joining in, and we'll catch up in the coming week for another session.